There's, I don't know. Oh, it's still on.
Yeah, he's Mark.
Can't hear him.
I think he was introducing you, wasn't he? Yeah.
All right, there we are, we're in. All right, good morning, ladies and gentlemen. Welcome back to another ShareWise webinar. My name's Harry McCaskill, one of the senior advisors here. Today, we're very, very lucky to have Mark Reed, the CEO of Verbrec. VBC is the ticker code on the ASX, one of Australia's leading engineering, asset management, infrastructure, and training service providers. So I don't want to take your reins there, Mark. I thought I'd let you to introduce the business a little bit more. But just the way today is going to go, a little bit of a presentation from Mark, just a few things he wants to go through, and a few key topics. Obviously, the company's full year 2024 results, some restructuring activities, and so on. So again, Mark, thank you for coming on board and doing a little bit of a presentation for those listening.
Thank you very much, Harry, and hello everyone. Good morning, ladies and gentlemen. As Harry's already explained, my name's Mark Reed, and I'm the Chief Executive Officer of Verbrec. I did just want to begin today by acknowledging the traditional custodians of the land on which we meet today, and pay my respects to their elders, past and present, and also take the time to thank Harry and the ShareWise team for this great opportunity to present Verbrec and to talk a little bit about the exciting journey we're on.
It's a pleasure, and there should be a few key questions coming through from the audience. So don't forget, if you've got any questions for Mark, now's the chance. You've got him one-on-one, and he's more than happy to ask a few questions. I've got some ready to go, and like I said, I'll jump in throughout the presentation and make it a little bit more interactive. So if anyone wants to join in, feel free.
Thanks, Harry. Okay.
Right.
So I suppose the first thing I should say is the usual disclaimer. We're not making any forward-looking statements or forecasts at this stage. So the information should not be relied upon. That's not relied upon to make any judgments of future performance or the results. And just to be clear as well, Verbrec at this stage is not providing any earnings or revenue guidance for the full year. But having said that, maybe moving on to the important stuff. I'd first, in this first section, I'd like to briefly talk about who Verbrec is, the clients we serve, and also the points of difference from our peers as a business in the professional services area. We are, as I say, Verbrec's a leading professional services company. We operate out of Australia, New Zealand, Papua New Guinea, and the Pacific Islands. And it's through the strong relationships that we built on trust, Verbrec enables a sustainable future for our clients and, by extension, their customers. We blend our traditional service offerings with emerging skill sets that address the electrification of everything, the transition of the gas market from a baseload fuel source to a peaking fuel source, and also support our clients on the journey as they look to capitalise on investments in sustainable technologies. And all this journey and focus has led us to refresh our strategy for growth, and I'll get into that strategy for growth a little bit later in the presentation. So maybe a few words on Verbrec's partnership model. Verbrec's strength is our ability to collaborate with our clients early on in the process, and then add value through the entire life cycle of an asset. We're often engaged with our clients very early on to conduct study work and help them select technologies for investment and funding decisions. And then we move on into the engineering, where we can support our clients with multidisciplinary engineering services, adding value to reduce their capital investment costs, their operating costs, maximising their asset returns on their projects and their business. We then provide our clients with asset management services. We can integrate the best early to develop methodologies, operational readiness methodologies, and operational practices, which increase the efficiencies and reduce the asset costs and improve productivities of the particular project and the assets. And then when it makes sense, we can partner for construction as well. We can provide turnkey construction services or act as an owner's engineer to support our clients through that whole construction phase of a project. And then we endeavour to partner to operate our clients' assets over a long period of time. You know, we can prioritise uninterrupted and efficient operations in line with legislative and regulatory requirements. For example, at the moment, we currently manage approximately 2,000 kilometres of gas pipelines and associated assets across Australia, and also provide a wide range of training services for client electrical trades. And then when an asset comes to the end of its useful life, Verbrec's there to work with our clients. We can either repurpose the asset or we can support them in the decommissioning. We like to think ourselves as a one-stop shop, right from the beginning of implementation of a project, right the way through to the completion of an asset life. So how do we create the value? We add the value, as I was saying, across that entire life cycle. We forge those long-lasting relationships with our clients. And that's really critical. We're with our client for the whole duration. We're not just there to build a project and run away. We're there for the whole duration of life. And a substantial portion of our revenues is generated through those multi-year operational contracts and panel agreements. And we endeavour to be the recognised partner for a sustainable future, enabling our clients' energy transition goals through innovative engineering. This slide shows some of our blue chip relationship clients and leading the way in an evolving energy landscape. It's all about energy transition these days and the journey our clients are on. And it's through deeply understanding our clients' needs and sustainable journeys, Verbrec will increase its share of revenues generated through those relationship clients. We have great clients. We generate a lot of our revenue through those clients. By fully understanding those, we see enormous growth potential in providing additional services to those clients as they go on their sustainable journeys. We think of financial year 2024 as a recovery period where we took the time to close out some of our underperforming projects and divisions that were holding us back. And we set a new foundation for profitability and growth, a new platform for growth. The outcome has been amazingly pleasing. We're very proud of what we've been able to achieve. And so over the next few slides, I'd like to walk you through some of the financial year 2024 results. On an absolute basis, we've achieved the best EBITDA and profit margin performance since Verbrec was formed from the merger of OSD and Logicams in 2019. Indeed, we've achieved the best EBITDA and profits for our business since 2015. This is a $11.5 million turnaround of comprehensive profit from financial year 23 to financial year 24. You will note on this slide that our revenues are reduced slightly, but it's important really to understand that we don't see this as a point of concern. In fact, it's a point of strength. It's primarily due to our more diligent and focused approach to our clients and projects that we've taken on, really ensuring that they have favourable economic prospects. The approach means we've produced a far better return on our revenues than we have in previous years. On this slide, I'm presenting some points of note from our profit loss statement, our balance sheet and cash flow statement. We've reduced our liabilities, importantly, reduced our liabilities over the financial year from 41 million to 28 million, while owners' equity has increased from 13 million to 19 million. We've also produced an operating cash inflow of $2 million, contrasting with a net outflow, a significant net outflow in 2023. Pleasingly, also, our cash reserves at the end of the period have remained stable.
And just quickly, just to jump in there, Mark, on the revenue point, What are the key factors that you see driving the revenue growth from where it was last year moving into financial year 2025?
Sure. We've got a number of areas we see growth. It's predominantly focused on going on this sustainable journey with our clients. If I may, Harry, if I could just hold that answer until I get to a couple of other slides, which actually do detail out some of the.
That's perfect. I'm jumping the gun.
Sure. No problems. Thanks. So perhaps just, but it does play a little bit to your question. This financial year 2025 outlook slide I've got here. So we're really looking towards this financial year 2025 as that year of sustainability and as sustainable and profitable growth. And so we've tried to present the revenue journey and the revenue expectations for 2025. So this is our outlook for revenue for 2025, the work that we can win and undertake in the year 2025. So we've been careful to filter the commentary here so that the opportunities are the opportunities we expected to be awarded and undertaken in this year. And partly to your point as well, over the past year, we've placed a lot of emphasis on improving our win rate as well. And sort of with that in mind, it's pleasing to report that Verbrec's increased our efficiency of conversion of opportunities to contract awards in 2024. Our average tender win rate now is around 36%, so better than 1 in 3 projects we bid, we win, against 31% in the past year or two. So, and it's certainly our expectation that we'll continue to build on that through the strength of our relationships to equal or better that win rate in 2025. Also like to highlight there is another segment on this graph, a top piece of the funnel, a fourth part of the funnel, if you like, where we track opportunities beyond 2025. Many companies we found opt to include these in their results, but they're really a more blue sky future year opportunities piece and probably less useful for the analysis in 2025. So it's our preference to keep those for internal management purposes only at this point and present this filtered 2025 view to give your audience a view of what the revenue expectations are for 2025. To your other part of your question, what are our strategy for sustainable growth? I would like to talk about how we've refreshed our strategy that we developed in 2024 and how we are going to achieve that growth in 2025. We certainly recognise as the market evolves, so must our strategy. And so we've taken a ground-up approach to developing a strategy, a strategic direction this year that maximises Verbrec's potential and really closely aligns with our clients' journeys to achieve a net zero future that everyone is talking about and driven towards. So the first part of the strategy starts with our clients. We are fortunate, as I highlighted before, to partner with a number of very loyal blue chip organisations, which we have very strong relationships, and they make up a material portion of our revenues. For example, 10 or 12 clients make up about 50% of our revenue and 20 about 70%. So we have these wonderfully strong relationships with clients. It's certainly our goal through key account management and strategic business development to continue to be the provider of choice for these organisations in the areas where we excel and be recognised as that partner of choice for a sustainable future with them, sitting at the top table with them, if you like. But certainly we won't get there without best people. So there's a real best people, great teams element to this as well. We've got an amazing, solid and very talented group of people that serve our client base, and we deliver great projects. But we need more. We're in a growth phase. We always need more people. So much is happening in our industry and as we drive towards that sustainable future. So we're continuing to search to ensure we have the best capabilities, the broadest capabilities and people to service the projects for today as well as tomorrow's initiatives. We've empowered our management teams to partner with the right groups to develop solutions to our clients who are on this sustainable journey. So in part, that requires us to embrace and understand new and emerging technologies in order to become that enabler of the client's success. So it is all around building capability, be it with partnerships, be it with recruitment of key skills and people. Of course, we need to learn from the past. We've had some well-documented problem projects in the past years. So we must continue to drive and improve our delivery, our on time and to budget, solidifying our reputation and reliability with those relationship clients, and eliminate the things from the business that erode gross margins and hinder efficient conversion to the bottom line profits. So if we look at 2025, we expect to grow our revenues and profits. And in this slide, go over some of the areas we see where that growth is coming from. Firstly, as I highlighted, we have this great set of blue chip clients, and we're poised through our performance to secure greater proportions of their project portfolio. Through these strong relationships, we expect to achieve organic growth and increase our market share in these areas where we're strong. I highlighted before that 20 clients made up about 70% of our revenue. If we were to grow that revenue, it's our expectation to strive to grow that revenue from those relationship clients by 20% this year. 20 times 70 gives us 14% overall growth of the business just on straight maths. So primary objective there. Geographic expansion is also key on this list, and it's part of that play with the relationship clients. We've made good inroads into the Western Australian market through our asset management and our operations and maintenance teams. So we expect further growth in those areas as well as we continue to build local track record and capability. Our competency training business, another exciting part of our business, has increased its footprint this year from 6 training locations to 11 in financial year 2024, driven by the increased demand for qualified electrical labour to support clients on their energy transition journeys. So another growth piece for us. And our innovative digital twin for the mining industry, our StacksOn product, is making a phenomenal difference and generating meaningful efficiencies and returns for clients who have adopted that software product. So for StacksOn, we're really at the beginning of a journey. We have a lot of iron ore clients in Western Australia who would benefit greatly from adopting this technology. But we're also now looking at how we adapt that software to suit other commodities like coal, get growth into coal on the East Coast, and copper in South Australia, to name but a couple of other commodities.
Yeah, right. And there's obviously, you've got your key strategies and what you want to be focusing on for growth, which looks very, very exciting. It's not all sunshines and rainbows, as we know, right? So what are the key concerns and what are the key challenges in maintaining, the growth and revenues in such a competitive market, Mark?
Sure. I mean, the first thing we need to do, and it goes back to strategy again, is it's very important that we take the time to understand our clients. We take the time to be a true partner of those clients and be at the table when they're discussing their sustainable journey. So it's really important that we do that well. It's important that we respond and we have the right technologies and the right abilities to deliver the expectations they require, and that's absolutely paramount to us. It's also important, coming back to people again. I mean, it is a war for talent out there still, and so making sure that we have the right people and the people we have stay, and we able to add additional people, and to fundamentally do what we say we're going to do. So
yeah,
if we commit to do something, it's important we do it. It's important we build the relationship with the client. It's important that we meet our delivery expectations.
Yeah, beautiful. And just another one, we've had a quick question come through from Jessie, and she's mentioned at the start of the year, we said that more detail would be coming out about the StacksOn, and obviously that would be shared with investors. Is that still forthcoming? And I guess what's the update in that regard?
Yes, is a short answer. It is forthcoming. We are very excited about that product. It's giving a lot of benefit to the clients who are using the product at the moment. For the people who don't know, this is a stockpile management product which enables smart, effective use of stockpiles and supply chain. We are optimistic that other people will see the benefits in that product, and we're certainly in discussions with a number of players at the moment regarding where we can deploy that product.
Beautiful. All right. Well, Jesse, hopefully that's answered the question. Sounds like it has. And we can continue on. I'll save a few more questions for the end.
Sure. The last pillar that talking about in growth is the energy transition. What is happening in energy transition? And I would like to focus on some of those sustainable areas now. There are some sustainable focus areas that we are looking at to continue to expand our service offering with, again, those clients. And there are 4 sustainable focus areas that we're looking at Verbrec. These are the areas we see ourselves best fitting into the evolving energy landscape for our clients on these sustainable journeys. It's what we term our sweet spot. It's our sweet spot where our in-house capability is well suited to adapt to our clients' changing goals and assets and needs. And if I just go through those, the first of those 4 areas is what we call electrification and energy storage. It's a core business for Verbrec. We're already working in this space, providing innovative solutions like systems modelling, battery technology trials. We're also investigating some very advanced geothermal energy technologies, for example, as well as some hydropower solutions as well. But beyond that, pursuing opportunities to make meaningful contributions in solar and wind energy as well. Another very strong focus for us is the gas market transition. This fully aligns with Verbrec's core capabilities and client base. It's a very critical area where we can offer Verbrec can maximise an offering as the world transitions from gas as a baseload fuel source to a peaking or firming fuel source. A lot of talk that's been going on recently about that. But Verbrec's skills in that area go beyond the traditional. We're already undertaking services with clients in the areas of biogas, hydrogen, carbon capture and storage, and some of the other emerging technologies. E-methane, for example, is another technology that's been talked more and more about more recently. And really the third area there is around providing engineering and asset management support to our key mining clients for Australia. The StacksOn product, which is really a digital twin product, sort of a machine learning product, is enabling our mining clients to deliver more on-spec product in challenging times, while increasing throughput and reducing downtime, contributing to a more profitable stockyard management, sustainable stockyard management. Very proud of what we're doing there. Also, we're an important contributor to water security through Australia and New Zealand. We're providing expertise to water authorities and other partners in critical areas, critical industries, designing, constructing, maintaining water assets, including traditional water infrastructure, but also desalination plants and water treatment facilities. It's one thing to talk about the world needing more copper as we go into our energy transition, for example, but without access to water, we won't be able to mine the copper. So there's really it's sort of a hand-in-glove relationship between water security and some of the minerals required to continue this energy transition journey we're on. But to provide a little more context, some of the drivers. These graphs, I think, tell a lot of stories. They're out of AEMO's 2025 Integrated System Plan. Really demonstrates the enormity of additional capacity and investment that's required in our evolving energy landscape in Australia. Just a couple of highlights there. Energy storage will need to increase more than 15-fold. That's 15 times by 2025. That's only 25 odd years away. Gas peaking plant capacity needs to significantly increase as well. While much of traditional gas assets will need to be decommissioned or retrofitted or repurposed to play a part in the energy transition. And we've also seen consumption of electricity still increasing as well, sort of doubling by 2050. So it's quite a challenge we're facing. And AEMO predict that the optimum path, as they call it, the optimum development path, will require a net present value of $122 billion, that's $1 billion, in annualised capital costs to achieve these objectives. Whereas the Australian Industry Energy Transitions Initiative has placed the investment closer to a mind-shattering $625 billion. So there's a lot of investment, a lot of activity to achieve the objectives that we're talking about. And of course, New Zealand, the other market where we have a strong presence, also has similar challenges. I suppose the truth is, though, that really no one no one really knows what the answer is, you know, and how this transition will exactly play out, and what the mix will be of energy and how, and what the overall total investment will be. But I suppose the message for us is, you know, we're there, we're in the game, we're working with our clients and their advisors, developing the right strategies to respond to the needs of the marketplace, and that's where we want to be with those very good loyal clients we have.
Yeah, definitely. And on the topic of the marketplace and I guess your market share, where do you see specific regions or areas you might want to be expanding in to increase that presence in Australia specifically?
Yeah. So I suppose if you take the if you take it by market area, we're seeing a lot of activity in that whole gas transition at the moment. It's a very active part. And so we see in the shorter term, I'm talking the sort of 1 to 5 years, we're going to see a lot of activity there. But again, the energy storage piece is just huge. So in all those areas I've highlighted, we're seeing growth. We're seeing really exciting growth there as well. And if I look at geographies, again, we're seeing in every geographic area, we're seeing the growth as well. I mean, the market is so large and so exciting. You know, it's great to be able to say that our clients are in that space and that our technologies and our skills suit the sweet spot that is the energy transition.
Beautiful, beautiful. Is there any other slides that you've got to go through? Or
just a couple of quick ones. One is I've one here. I really want to make the point that this is not pie in the sky for us. I mean, chart here shows our 3 main core markets. And in those markets, already 33% of the project portfolio comes from those sustainable focus areas. I mean, it's not a we're going to do, we are doing. You know, our clients are appreciating what we're doing, and we're proud to be playing a meaningful role in those areas. And we expect that to grow over time as the industry, of course, continues in this transition to a more sustainable future. Harry, I had a couple of other slides. I just wanted to go through a couple of projects that hopefully
go for it. That's awesome. That's what the investors want to see. What's going on and what's to come. So go for it. And we can.
I've picked a representative sample of projects that are that we're dealing with now, that we're involved in sort of as we speak. Sort of near the end of the financial year, we secured our first multi-year pipeline operation and maintenance contract in Western Australia, which is a big geographical play for us. You know, as a highlighted, pipeline operations is a core service offering of our operation and maintenance team, and provides that really nice, long-term, sustainable, predictable, multi-year line of revenue for us. And as we look at, while we're excited about Western Australia and the role there, is Western Australia's served by relatively few competitors in the space. So breaking into this market's a real achievement for us, and gives us the opportunity to get a leg up and introduce our competitive offering in this region and secure a larger, sort of greater market share in Western Australia. We specialise in innovative engineering and project delivery, as we highlighted before, to our clients. You know, we have technical specialties in automation and control, power, process, pipelines, and plant. And very recently, our engineering team has been awarded the front-end engineering, as we call it, the so-called FEED, one of Australia's largest pipeline development projects. We're involved now in the engineering of that, the upfront engineering. And so this pipeline is poised to be a critical asset in enhancing energy security in New South Wales. By improving the reliability of gas supply, the pipeline contributes to stabilising and reducing the gas and electricity prices in households and manufacturers and business across that region. So another nation-building project, I guess we could call it.
Well, I think that sounds very, very reasonable.
And a couple of others, you know, we specialise in working with owners and operators to provide asset management solutions. That's what our asset management business does. How do we get more efficiencies? How do we reduce costs? How do we improve productivities? How do we unlock higher value from those clients' assets? So here's an example. Again, in the West, we secured a new project providing business improvements at Paraburdoo, the iron ore mine at Paraburdoo, expanding on earlier works, looking at mobile equipment maintenance. And now we're going to focus on the fixed plant and non-process infrastructure. So how do we get it's one thing to build a new asset, but just as critically, how do you get more out of current assets? How do you make them work more efficiently? And so it's a big growth area for us.
Yeah.
Perhaps just to add a little more colour to the question about StacksOn, someone asked before. StacksOn, as I highlighted, is our digital twin for stockyards. It enables on-spec product in challenging conditions while increasing throughput and reducing downtime. For us, the revenues are generated through a blend of software license fees. It's a software as a service product, as well as ongoing support and consulting services. We do see growth in our StacksOn business, as your viewer commented before, not only in the increase in the iron ore market in Western Australia, but beyond. And we'll continue to work at maximising its utility, not only in new markets, but also adding new features. So it becomes stickier, if you like, and increases the revenue stream from our existing stockyard users as well.
Yeah, beautiful. It's an opportunity, to continue those revenue streams.
It is, yeah. So the other one, competency training, a lot of training required. Specialist training. This is specialist training in hazardous operations, high voltage areas with our clients in the electrical and renewable energy space. Obviously, with the massive growth in energy transition comes the need to make sure we have trained professionals in the area that can operate in that space. So we're seeing a massive leg up in the training demands there, not only in Australia, but also with international customers as they look for better training and competency assessment to meet the stringent electrical standards we have in the Australian market as people come into the Australian market. I think our reputation is also leading to us not only to gain a greater market share in a rapidly growing market, which is kind of a good place to be.
You'd assume so. Good area there.
Yes, I hope so. So I suppose those are the projects I just wanted to touch on, but I did have a few concluding remarks, and maybe then happy to take a few more questions. I suppose concluding remarks, really, the board of management of Verbrec, I can put my hand on my heart and say we worked extremely hard over the past financial year to set a new foundation for profitability and growth. I think the outcome's self-evident. It's the highest profits we've had since 2015. It's the highest profit margin since the merger of OSD and Logicam in 2019. We've repaired a balance sheet. We've optimised our operations to produce revenues that dramatically reduce cost of sales. Our gross margins are up. Our new strategy is in place and active. And now it's all about positioning ourselves to grow revenues and profits in 2025. Our growth, we've got growth in targeted business units, including the asset management, the operations and maintenance, competency training. They're all performing strongly, and we anticipate that trend to continue. And returning to producing a dividend for our shareholders remains a core goal for us. Be front of mind for our board and management team over the coming financial year. So perhaps in closing, myself and a really competent management team here are really genuinely excited about a very bright future we have in the company that is Verbrec, and the role that we can play in enabling a sustainable future for our clients. So roll on 2025 and beyond. Thanks.
It's obviously the share price has done really, really well 2024, and all the hard work is starting to really pay off. And obviously you're probably very, very proud of the team behind the scenes. And we've just had a question again coming from Jessie. She just mentioned it. The past year has been very, very successful in riding the ship in terms of profitability. Is a return to growth now a reasonable expectation moving forward?
In the short version, yes. We see we have again loyal clients, a good strategy, a sweet spot in terms of technology, and we are providing products that our clients want in a market that needs them. So we certainly see the platform for growth has been established. Yeah,
it's a recipe for success. Obviously it's more about the execution, being patient. Things don't happen overnight, that's for sure, as we know. And we've got one came in a little bit earlier on in the presentation, and it just sort of covering cash conversion and the EBITDA. But how should we think about a normalized / target EBITDA to cash conversion?
I have my chief financial officer in the room. I might throw that one to him if I can, Harry.
Yeah, I was sort of leaving it out of the equation because I wasn't sure if that was one you could cover. If he is there, I'm sure the listeners would be keen to hear.
I hope you can hear him. Richard Aiden's his name. So hi, Richard.
Yeah, good morning, everyone.
Richard, good morning.
Hi there. Yeah, look, our EBITDA to cash ratio is high. We don't have a lot of CapEx spend in the business.
Yep.
And our debt is reducing on a fairly aggressive basis. So I think what we're looking at doing is accumulating cash over the next sort of 12 to 18 months. And give our board some decisions to make in terms of investment into the business or growing the business and paying dividends to shareholders.
Beautiful. And, those dividends are really going to pay off for those sort of long-term loyal investors as well. Obviously, you've got loyal clients. Loyal investors is also the next step, and continuing to show results and progress. Well, obviously, they're going to be along for the ride.
Absolutely.
Indeed, and we have $34 million worth of tax losses that we can use along the way, as well as $5.6 million of franking credits when the time comes.
Beautiful. Well, gentlemen, it's been a pleasure, and hopefully everyone watching has got a little bit out of this one, because I know I have, and I've been watching the story for a long time now, and I'm excited to see where it sort of leads from here. It is recorded, so if anyone's missed the start or any part they want to just go through and just reference again, jump on our YouTube channel. I'm sure Mark, he'll put it out on his socials, and Verbrec as well. So it's been a pleasure listening and sort of hearing what Mark has to say. And Mark, thank you again.
Okay, thank you very much. Appreciate it.
More than welcome. Talk soon.
Yeah.